This morning, Westpac sued for allegedly charging dead people. That's our main story. Also today, fears over the Omicron strand of coronavirus calm slightly. A horror new report shows abundant sexual harassment in Parliament House. And building approvals for apartments plunge. It's Wednesday, the 1st of December 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael, and happy summer.
Oh, we are there at last, aren't we?
Finally, we're not feeling it in much of the East Coast, but we are here.
Yeah, at least we have finally ticked over, and it is only 24 days now till Christmas.
Don't talk about it.
All right, moving on. After the podcast, stay listening as well for Sean's chat to David Price, the founder of BizPay, which is essentially buy now, pay later for businesses. But first, Sean, as I mentioned, the corporate regulator is suing Westpac for widespread compliance failures, including, in one case, allegedly charging people who had died. Is it really as bad as it sounds?
I'd have to say yes. ASIC yesterday said it had launched multiple legal cases against the country's second largest bank, alleging failure across several of its businesses. The bank has already agreed to pay $80 million in compensation to thousands of customers and a $113 million fine, and it will start a remediation program next year. Now, Westpac isn't arguing the case here. Yesterday's announcement was very much choreographed for both sides. And in fact, the bank CEO, Peter King, said it was good to be able to come to an agreement with the regulator.
So you'll have to take me through it. What exactly did Westpac do?
In essence, Westpac's compliance program in recent years has been a mess. In the most outrageous claim, ASIC says Westpac charged more than $10 million in financial advice fees to over 11,000 customers who had died. It had also sold credit cards and other debt using incorrect interest rates. More than 16,000 customers were overcharged. Its wealth management arm charged insurance premiums to members that included commission payments, even though commissions are actually banned. It distributed duplicate insurance policies to more than 7,000 customers for the same property at the same time. It just goes on.
Is it still going on? I suppose that's the big question.
Yes, it is. Look, you'd hope not, but how can you be sure? Most of these cases have occurred over several years and emerged in the Banking Royal Commission. Mr. King, the head of Westpac, said he's been trying to simplify and clean up the business, and he says this puts a line in the sand. Can we believe him? I'm not so sure. Now, Westpac isn't alone. AMP, Macquarie and Commonwealth Bank have all been fined over Royal Commission-related matters, but Westpac seems to keep getting kicked. Remember, New Zealand authorities were critical of its compliance just last week, and of course, the record-breaking fine Westpac had to pay last year for enabling money laundering, that one really stands out. It just does nothing for confidence in the bank. Now, Westpac's share price fell 2% yesterday, and it's easily the worst performing of the big banks over the past year, and this compliance issue is a big reason for it.
Okay, putting Westpac to one side for a minute, how did markets perform yesterday?
Well, the S&P ASX 200 closed up 0.2% as cooler heads prevailed around the threat of the Omicron variant of the coronavirus. It was the end of the month, of course, and for the period, the S&P ASX 200 finished down just under 1%. Travel stocks all did better yesterday, with Webjet and Corporate Travel Management both up around 5%. That follows the sharp sell-off on Monday, of course. The gold diggers fell as the gold price fell. St Barbara and Perseus Mining were both down more than 4%. Iron ore prices surged yesterday as speculation mounted that China's steel mills are preparing for an easing of production cuts as soon as later this month. The spot price of iron ore, Michael, jumped 7% to more than $103 a tonne. Great news for our miners, you'd think. Chinese research group MySteel said China's steel mills are restocking ahead of a restart of idle plants. Now, helping out the local miners is lower production guidance from Brazilian giant Vale. Vale is the main competitor to the big three Australian miners. All the news helped BHP yesterday, which jumped more than 2%, but Rio Tinto and Fortescue Metals both fell back pretty sharply, really. Now, the only thing about this story which I question is whether the restart will happen as soon as next month. I'm sure Beijing wants to keep air quality as good as possible ahead of February's Winter Olympics, and the greater Beijing region is home to many of the steel factories. I suspect the ramp-up may take a little longer.
Yeah, I reckon you might be right there. What happened in overseas markets overnight, Sean?
Wall Street fell sharply overnight, Michael, after US Federal Reserve Chair Jerome Powell said inflation can no longer be considered only transitory. That's a major concession from the head of the US's central bank, and investors started pricing in 2 interest rate hikes next year. In mid-afternoon trading, the 3 main indices, the Dow Jones Industrial Average, the S&P 500 and the tech-heavy Nasdaq, were all down around 1.7%. European markets were also lower. Oil prices tumbled overnight, with Brent crude falling to a little over $70 a barrel. A slowdown in global growth, be that from higher interest rates or the Omicron strand, weighed on that market. Gold prices were also lower, and the Aussie dollar is trading at 71.1 US cents, having dipped below 71 cents overnight.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty around this morning to discuss. Yesterday, Prime Minister Scott Morrison ruled out any lockdowns to curb the spread of the Omicron variant of COVID-19, saying that Australia will stay open for families to be reunited at Christmas.
He did, though of course the state premiers decide whether or not to close borders, not the Prime Minister. Mr Morrison pushed the state premiers in yesterday afternoon's National Cabinet meeting to stick to the COVID reopening timetable. Generally, it was a bit calmer yesterday all round. Share markets were higher, we've talked about that. The business and education communities generally accepted the decision to delay the reopening of international borders to foreign students and workers for another fortnight. In New South Wales, a number of venues were listed as exposure sites after a 5th person tested positive to the Omicron strand. But the state's Deputy Premier, Paul Toole, said the roadmap out of lockdowns would continue. Federal Health Minister Greg Hunt said he believes the dangers from the Omicron variant were manageable. Now, overall, Michael, New South Wales recorded 179 new cases of COVID yesterday, that's all strands, and 3 deaths. Victoria recorded 918 cases and 6 deaths.
Now, Sean, this one is pretty confronting. A report into Federal Parliament's workplace culture has found that 1 in 3 staffers, can you believe that? 1 in 3 have been sexually harassed.
And Michael, if you add bullying into it, the number is 1 in 2, 50%. The Sex Discrimination Commissioner Kate Jenkins' report, released yesterday, is based on contributions from 1,700 individuals, with women reporting higher rates of harassment and bullying than men. Prime Minister Scott Morrison said the behaviour outlined was appalling and disturbing, and he stressed it involved all political parties. He said the culture had grown over a long time, and while stress in Parliament House was common, it wasn't okay to normalise inappropriate, unhealthy and unprofessional behaviour. The report comes after Coalition staffer Brittany Higgins reported her alleged rape in Parliament House earlier in the year. The report makes 28 recommendations to address bullying and sexual harassment and assault in Parliament, including setting clear standards, establishing an independent complaints body and developing an alcohol policy. Michael, I've worked in Parliament House. I think the last one is perhaps the most important one to kick off.
Yeah, seems to be. Sean, there was a bunch of economic news out yesterday, but the one that really caught my attention was the massive fall in building approvals.
Yes, the Bureau of Statistics said approvals fell almost 13% in October, much more than anyone expected. Now, the main reason was a tumble in apartment approvals. In fact, house approvals rose by 4.5%, though that's likely to decline over the next few months because the Home Builder Construction Grant is no longer available. Now, Michael, there's a few reasons for the slump in apartments. Immigration being the big one, that's fairly obvious. But also during the last property investment cycle, apartments did really well, so there's just plenty of stock out there. Also, people have moved away from the inner cities. We know that. And anyone in lockdown understands the benefits of not being in an apartment. So putting all that together, people just aren't building apartments like they were. Non-residential buildings also fell. As you mentioned, there was plenty of data out yesterday. The Reserve Bank credit information showed that growth in housing and business credit was higher, though personal credit was flat. And the September quarter trade data showed an increase in the current account surplus to almost $24 billion. Now, that's a new record. Remember, economic growth figures for the September quarter are due for release later this morning. They're expected to show about a 2.5% fall. But that's already old news.
And we'll have all the latest on that old news this afternoon in the Afternoon Market Report. Now, Sean, Collins Foods, which owns KFC, reported strong results yesterday, triggering a 13% rise in its share price. Good results.
It's a great result. Now, we talked yesterday about the pizza wars between Domino's and Pizza Hut. Today, we're throwing in the chicken option. Collins Foods owns KFC in Australia and parts of Europe, including Germany, as well as the Taco Bell franchise locally. It reported single-digit revenue growth and a jump in underlying profits, thanks mostly to the European business and thanks mostly to what was going on in Germany. KFC Australia also hit record revenues for the half year with growth in digital and delivery channels. All in all, Collins Foods, and particularly KFC, are doing pretty well at the moment.
Now, we've talked a fair bit recently about AMP and the new boss of AMP, Alexis George. Now, she faced up to investors yesterday. How did it all go?
Well, after she spoke, AMP share price jumped nearly 8%. So that's some indication, though by the end of the day, it was up just 3%. Ms. George told investors that the demerger of its infrastructure and real estate funds business would go ahead in the first half of next year. The AMP business from then will rely heavily on its bank and a simplified wealth management business. She said the financial advice business, which of course was once the mainstay of AMP, would be loss-making for the next 3 years, but they will stick to it. Ms. George hopes to cut more costs, and that was in large part responsible for the share price surge. AMP is now 1/5 the size it was before the Royal Commission, from which, of course, it was harshly criticised. Ms. George has her work cut out for her.
Okay, Sean, what's making headlines in today's news media?
Well, the Financial Review is reporting that the Prime Minister Scott Morrison has threatened to intervene and break the industrial gridlock on the nation's ports unless the Maritime Union of Australia and Patrick Terminals negotiate a resolution to their months-long dispute. And the Fin is also reporting that the Morrison government will establish a sweeping inquiry into how major technology companies allow toxic material to be published and distributed on social media. Escalating his crackdown on big tech, Mr. Morrison will announce the parliamentary inquiry today into companies' practices and the potential harm Australian adults and children are exposed to, as well as put their secretive algorithms under the microscope.
Running through some of the other stories around today, National Australia Bank has estimated that Australians spent more than $8 billion across 4 days from Black Friday to Cyber Monday. That figure's based on analysis of merchant transactions. Sales were up about 8% on 2019, with technology retailers, shoe sellers and jewellery stores doing best. There you go.
I helped every one of those people out.
I'm sure you did.
You may remember yesterday, Michael, we talked about the new rules around holding capital for banks. Banks have to set aside more money if they're lending for interest-only mortgages or to investors. Now, Macquarie Bank yesterday came out and said as a result of those new rules, it will have to set aside an extra $2.2 billion in capital. Meanwhile, the group has raised $1.3 billion in fresh equity from retail investors to go with the recently acquired $1.5 billion in new equity from institutional investors.
And the Financial Review, Sean, is reporting that at least 2 big institutional investors in Oil Search will vote against the merger with Santos at next week's poll, arguing the deal sells Oil Search short. We've talked about that a fair bit in the past. That's about 6% of shares, and the deal needs a 75% yes vote to pass.
May well be closer than we thought.
Mm.
An industrials company, GUD Holdings, will buy tow bars and trailer parts business Auto Pacific Group for $745 million. GUD is buying the business off Australian private equity group Pacific Equity Partners, and there was another transaction yesterday. Credit Corp said it would acquire the assets of Radio Rentals from Thorn Group. I didn't realise Radio Rentals were still around, to be honest.
Apparently they are. Now, what's the key overseas news this morning, Sean?
The global boss of Moderna has predicted that existing vaccines will not be able to handle the Omicron variant of the coronavirus as well as they have earlier strains. Stefan Bancel warned it might take months before pharmaceutical companies can manufacture new variant-specific jabs. And a court in Myanmar has postponed its verdict in the trial of ousted leader Aung San Suu Kyi to allow testimony from an additional witness. The former leader has been held since the army seized power on February 1. Of course, Michael, we have a particular interest in this case. Australian academic Sean Turnell, who was working with the leader, is also being held and shortly faces trial in Myanmar.
Yeah, it's a long time to have spent in a prison over there waiting trial.
It certainly is, and I think the conditions have been pretty tough on Mr. Turnell as well. We all hope that we get some positive resolution sooner rather than later on that one.
Yeah, absolutely. Now, Sean, up next is the Daily Interview, and today you're speaking to David Price, the founder of BizPay.
Yes, this is buy now, pay later for businesses. So it's B2B transactions. It's a really interesting model. I must say I knew nothing about it until I spoke to David. Well worth a listen. Even if you're not an investor, just the business model itself is really interesting.
Yeah, certainly is. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael. Enjoy the first day of summer.
Oh, I will. It's Wednesday, the 1st of December, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook, and head to fearandgreed.com.au to sign up for our free daily newsletter. I'm Michael Thompson, and that was Fear and Greed. Have a great day.